Morning folks, very quick thoughts on natural gas. I've just got this channel on the 4-hour chart. Have a look at this channel. It's quite magnificent actually. You don't get much better channels than this. It's absolutely perfect. The problem with perfect charts is that they eventually start to break down. When you see something that's absolutely picture perfect technically on your chart, you know that it's unlikely to last. And particularly as it goes on, as it gets longer and longer. So here we've got a very long channel on the 4-hour chart. It's not so long on the day chart, but on the 4-hour chart, it's absolutely perfect. Look how many touches we've got on the top line. So we've got 1, 2, maybe 3, 4, maybe 5 on the top line, and we've got one multiple touch. We'll call that 1, 2, 3, and then 4, 5 on the bottom line. Once you start getting past 5 touches, 5 and more, so 5, 6, and so on, it becomes more and more likely that this channel or this pattern will break eventually, and normally to the side which you expect it to break in. In the case of a downward channel, you'd expect it to break to the upside, unless we get a market capitulation and complete collapse, in which case it might fall through the bottom of the channel, but that would indicate a channel breakdown and an acceleration of the trend. Most of the time, however, channels break in the opposite direction and they turn into a sort of an extended flag. We've actually held the bottom of this channel pretty well on natural gas. We're trading at 2.4 now, $2.40. And we got down as low as, I think this was around about 2.2, just above 2.2 or thereabouts. So this is looking pretty good for an attempt to get back to the top of the channel. Remembering we've got a little gap here where this big red line is, that's the weekend rollover gap. We need to get above there and then trade above this swing high at $2.60. If we can swing above there and close above there, that would also give us a close above the channel top and the chance for a move higher. Let's switch across to the day chart. And here you can see it's actually turning into quite a lengthy channel. And even on the day chart, we've got some perfect touches. So let's count the day chart touches. We got on the top side, we got 1, 2, 3, 4, maybe 5. And on the bottom, we've got 1, 2, 3, 4, 5, 6, 7, 8. Actually, 8 separate days we've touched the bottom channel line. All of this means that actually this channel looks due for a break. We're holding above the key $2 level so far. We know that between $2 and $2.50, we're in the sort of bargain pricing range. And below $2, we're into what I've called the dollar store region. So we're still holding above $2, a pretty crucial and key level. We don't often trade below $2. When it does, it's a bit of an anomaly, and it offers buyers a really good opportunity to get in at a lower price. What I'm hoping for today and to finish off this week is another strong daily candle. This is the day chart. You can see the candle's still small and weak at the moment. Let's hope for a push up above the gap, above this red line, and maybe, just maybe, a daily close above this channel line. I know we've got a lot of weather and supply and storage and demand issues going on, which is putting pressure on the price of natural gas. Every sensible person would be saying, well, we should actually be looking to short, and you may be right. However, we've seen this many times on commodities, and I've certainly seen it over the decades. Often commodities do what you least expect, and we've seen that recently with wheat in the Russia-Ukraine situation, and even more recently, we've seen it with oil and natural gas prices with the Israel-Hamas situation. Neither of those panned out. In fact, the opposite effect. The price of wheat and the price of oil actually dropped as a result of or during those conflicts arising. So sometimes, and quite often actually, commodities do the opposite of what you'd expect. We expect weather and supply and demand and all that sort of thing to keep the price down. I'm posing we may actually see the opposite. We may see a good rally. Hopefully starting today, a rally above this red line, the gap and the channel line, and maybe a close probably just below the 200 period moving average. And during the weekend, if we manage to gap above the 200 and open above the 200, that would be a very good sign. I'm not saying that's going to happen. We could continue to move down within this channel. We could get to $2 and maybe even slightly below. There'll be another good opportunity to buy natural gas. Take care, have a great trading day today, enjoy your weekend, and if you enjoyed this, please consider subscribing to the channel and give us a thumbs up at the very least. Speak to you soon.